Unlocking new levels on them. What don't kill you make you strong.
But without further ado, the faster you understand this, the better your life will be. Like the moment I learned this in my brain, like it turned into a bullet train, right? Like this could be a lifeline when you're down and out, and it also could be a downfall if you're not responsible. So what is credit in the financial world? We know it as IOU. But the definition that I got here is the act of borrowing a line of credit or money with the agreement to return it. Simple. But it's a little more to it, right? Like if I lend you $500, in order to be in good standing, you have to use 30% of the 500, right? So if you pull up a calculator and let's do 500 divided by 0.30, that's going to be like $166, right? But the problem is, how many of us see the $500 and we want to spend it all? I need y'all to just like drop a 1 in the chat. We got to be honest here. Okay. I see a couple ones in the chat, right? And how many people out there, like, they was introduced to a credit card and said, this is for only emergency uses only? Drop a 1 in the chat, please. Exactly. Right. And then how many how many of us like had credit used without us even knowing? Like a light bill or a cable bill, or drop a 2 in the chat. I guess that's part of the game, you know what I'm saying, from where we come from. Or at least the people in the inner cities, I guess that's part of the game, because I see a lot of 2s in the chat, right? So me, I'm Anthony Williams. I didn't go to college, no student debts. Everything I purchased was with cash, right? So I actually ran from finance because I just thought it was boring. That was the biggest mistake I ever made in my life. I think the biggest mistake I ever made in life was running away from financial freedom or running away from finances. So, you know, your mindset starts to change, and then you actually got to think big, dream big, and then become big. You know, like the rich and the wealthy, they all leverage good debt through assets, leveraging OPM, using other people's money, leveraging other people's money. And this is why credit's so important right now more than ever, because the US dollar used to be number 1. It's currently at the number 7 position in the world. So the US that used to be this big conglomerate is now like tanking, right? So I personally believe like your best bet is to maximize the dollar as long as it's still in the top 10 currencies, because as it tanks, whoever is financially free will actually have more options, and the people who don't, they're going to tank. So you got good debt and you got bad debt. Now you weigh the reward on where you see the scales tipping. I'm gonna tip towards more the good debt than the bad debt, because good debt is gonna help you out. And before we go any further with this masterclass, right? Who is this for? So you got a chance to stay, or you got a chance where you could possibly exit the room, right? Who is this for? This is for people who's disciplined with finances and they looking to leverage credit/debt to become financially free. If you got a mindset where, oh, you can't do this is possibly not gonna be for you, and you're gonna have to change that this very second. Like if you feel like you're ready for this, drop a 1 in the chat. Everybody else, we'll see you later. So we got that out the way. Everybody who's here, thank you once again. We're going to continue along, and we're going to talk about relationships, right? So how to create a great relationship with these financial institutions. You basically going to need to follow their guidelines or their lending terms. And their guidelines and lending terms, will eventually be reported on your credit report if you choose to deal with them, right? Your credit report is a statement that has information about your credit activity, your current credit situation, your loan payment history, and the status of your credit accounts. And the people that's housing your credit report is going to be these three agencies called Experian, Equifax, and TransUnion. If you ever heard of them before, I don't know if you ever heard of them. You've seen it on your credit report. And if you don't know how to get your credit report, you can go to myfreescorenow.com, annualcreditreport.com, the Experian website. I know a lot of people, they use Credit Karma, but their system is a little different when it comes to you getting the inquiry and they're checking your credit score. So Credit Karma I didn't put up there. I know a lot of people use it, but it's your score, but it's not a score that they use. So don't let Credit Karma fool you. Now, based on your credit score is going to determine the likelihood of you paying back your loan. So like your good credit score is 9 times out of 10 means you're in the green. You're going to get less interest, and bad credit is you in the red. You're going to get higher interest and a denial possibly. Now, no credit score, it means you just got some work to do. You just got some work to do. You got to lay down a couple bricks before you start even, moving ahead. But we're gonna touch on that if you got no credit score in a minute. So stay tuned. Revolving lines of credit. Revolving lines of credit and installment credit. These are two types of credits that you're going to have. The revolving lines is going to be credit cards, home equity lines of credit, and personal and business lines of credit, right? And then you got installment credit, which is accounts that allow you to borrow like a lump sum of money from a lender, and you got to pay it back in fixed amount. So that'd be like a monthly term. If you borrow $5,000, you paying $50 a month until you pay that off, which is kind of crazy, but that was just, an example. Now, credit score, right? Your credit score is going to consist of 5 factors: your payment history, your utilization, your length of your credit history, new credit, and a mix of credit, right? Payment history is the biggest chunk. It's 35% of your score, which is literally your on-time payments. Utilization is 30% of your score. So that amount of credit spent in total is going to be what you need to have intact on your due date cycle, right? The length of credit history is 15% of your score. So it's going to be the age of accounts that's on your credit report. So let's say if I started building my credit 7 years ago, I opened up a card since then and it's still open, my credit history is going to be 7 years of credit history, as opposed to if who I am now and I opened a card last year, I only got 1 year credit history. New credit is going to be 10% of your credit score. So that's going to be like your inquiries, like applying for apartments, lines of credit, purchasing a car. You got 2 different type of pulls here. Now you got a soft pull and a hard pull, right? So soft pull could be like you checking your own credit, or you authorizing a soft pull on your credit to see like if you're eligible. And then a hard pull affects the credit profile because it reports to the agencies like whether you apply for something, if you get accepted or denied. So they both go on your report, but the soft pulls don't affect it. Your hard pulls, whether you get approved or denied, it will take your score a couple points. So keep that in mind and stay on top of that with anything that's like a hard pull. If they don't say pre-approval, soft approve, anytime you go to apply for something, it's gonna impact your credit score. So keep that in mind. And your mix of credit is gonna be the last 10%. So it's gonna be the different accounts on your credit report. So it's like mortgage loans, auto loans, student loans, credit cards, and lines of credit, pretty much. So that all is gonna be 100% of what makes up credit score, right? So which side would you like to be on now? Would you like to own a house, purchase a car, start a business with high interest rates, leveraging OPM? Or would you want to be on the other side? Bad credit, high interest rates, denials, more money you got to put down, and a lot of stress. I told you we're going to tip the scales. Good credit, bad credit. What side you want to be on? Now, like I said, if you don't have credit, let's talk about building credit, right? Building credit, it could be easily done if you get a trade line. That could be one of the factors that can help you give you some credit history without you even doing anything. Is you piggybacking on a line of credit. So it's like you become an authorized user on someone else's credit report who basically has had good standing from the time they started till now on their credit report. You absorb that history. So you'll get a head start with that, although that plays a factor. That's not going to be the only thing that gets you accepted to do things. If you're fortunate. If not, you could purchase a trade line online as well. First thing that people start with when they're building their credit report is going to be secure credit cards. That's what people start off with, and it's pretty much a deposit of your money onto a credit card that usually determines the limit of your card. Like, yes, it's your money, but usually after 3 months, you could get an increase on the limit. And after that 6 months, you could get that unsecured card and your initial deposit back. And now since it's unsecured, now you got your money back, you get in good standing, and you graduated pretty much. Is that making sense to everybody here? Yep. All right. And then next, when you're building credit, we got credit building apps. And these apps are going to give you access to primary trade lines up to $30,000 depending on the plan or the company you choose to go with. They got installment loans there. And this is further going to strengthen your credit profile. So you got Kovo, you got Me Ava, you got Kickoff, you got Self, you got Tomo, you got Money Lion. You got a whole bunch of these that can help you get started building credit if you're just starting out, right? Now, regardless of where you at, if you want good credit, I'm going to give you a few tips, right? So, one, I think the number one thing that people have a problem with is discipline. And we're going to go back to discipline, right? Even with the secure credit card, I know that's your money, but still follow the guidelines to keep a good credit score. It's $500. Let's say you put $500 on a secure credit card. Like I told you, spend 30% or less. I would say spend 10%. So I would say only spend $50 as opposed to $166, where you really be in a good standing with the credit things, and you'll be able to move up faster, get higher loans if you follow that. So the number one thing is having discipline. Number two, pay off your balances in full. And this is to keep in good standing. And the number one thing is, if you want to graduate from that secure card, we're not trying to pay interest on the bill. You know, it's going to show that we're responsible. So let's say if you got an unsecured card, regardless, if you paying off your bills in full, a lot of times you'll be able to get that limit increase faster because they'll see you're very responsible and you don't really need them. It's a game at the end of the day. You got to show them you don't need them, even though you do need them, but you got to show them you don't need them and just have that disciplined mind. Take your credit report seriously. You know what I'm saying? Like, this is one of the easiest things to mess up, and it's harder to fix. It's not impossible to get your credit fixed, but it's harder. So you might as well just keep them good habits. Another thing, avoid maxing out your credit cards. Like, especially with liabilities that you don't need. Like, avoid maxing out your cards. It's not going to be a good thing for you. Your score is going to drop. Your utilization is going to drop. You're going to see your points drop probably by like 100 some points. Because one, your utilization is high. And two, your payment history, if you don't pay it on time, it's going to tank. So avoid doing that. Do not give anyone access to your credit card numbers, because whoever has access to this could potentially mess up your credit. Although credit is very lenient when it comes to you reporting stuff happening, you don't want this happening. This is not something you want to happen. Stay away from co-signing as well. Stay away from co-signing. People need a co-sign. Be like, listen, look, I understand, but this is my life, my livelihood. If they F up and they don't pay, you still have to, it's still going on your credit. So I don't think you should do that. And if you got bad credit, you need to change your relationship with money and credit and develop the discipline. Next, you're going to have to learn how to fix up your credit or get your credit fixed up and get rid of those negative remarks on it. So I want to talk about good credit and bad credit. If everyone's here with me, still drop a 1. Absolutely. I appreciate you. Right? So good debt versus bad debt, right? So let's talk about bad debt first. So bad debt is pretty much liabilities without a plan. Some of the things that people get into that they don't really understand is like high interest personal loans. Somebody may be going through a rough time. They're like, you know what, let me get a personal loan. But the interest may be high because your credit score is low. You know? Payday loans. Payday loans is the same thing. You run a low on cash. You ain't built up the discipline enough, so now you got a payday loan. You got to pay somebody back daily. Or sometimes it's weekly. And then when your credit score is bad, you applying for credit cards and you got high interest credit cards now. Because since your credit is bad, they're like, all right, we're going to tack on so much interest on a card where it is what it is. You take it or leave it. So you want to definitely, with the bad debt, you definitely want to stay away from these kind of things. And like also, if you mind like clothes, sneakers, dinners, you going to movies, 9 times out of 10, if you got bad debt, you don't have a car that has good APR percent on it or good rewards on it. So it's ultimately effing you over. And then your credit usage 9 times out of 10 is going to be like very high on your statement date. So like I said, utilization is going to be so high, your credit score is still going to drop even if you do pay it on time. But it's like, this is the things that keep you on the hamster wheel. These are all the bad habits that keep you getting in bad debt. So now, good debt, assets. And people say, what are some of the best things I can invest in? Or what are some of the best things that I can do with good debt? First thing I would say is invest in yourself. You are the vehicle driving whatever's going on. You are in control of that car. You are in control of whatever you're doing. So good debt is yourself. Investing in yourself. That's going to be the number one thing before school, before anything, before any of that. You have to invest in yourself and make sure you're investing in the right things. The next thing I would say is going to be a mentor. If you want to go somewhere in life, you need to get there with somebody who's been there with the least mistakes. You want to take the shortcut. You don't want to make the mistakes. You want to learn from your mentor's mistakes, and you want to eventually graduate from there. Reason being, if you look at any basketball player, boxer, whatever, any of the Mikes. Mike Tyson had a coach. Michael Jordan had a coach. Floyd Mayweather had a coach. Everybody in life had a coach to help them get to where they need to go. So I don't understand why people feel like, oh, I don't need that to flourish. It just doesn't make sense. The best people in the world, the richest people in the world had people mentor them get to where they want to go. Even people who don't deal with money, they have a sensei like Bruce Lee. He had somebody training him. Everybody had a coach, a mentor, so you can't do it all by yourself. Another form of good debt will be a mortgage. A mortgage, it shows the consistency if you're paying over time. If you got tenants in it and you're renting it out, it shows good history with you, and that's another good form of a good debt. Home equity is a good debt. Cars, if you're building up a Toro business or things of that nature, if you're using your car for passive income, you're renting it out, these are good signs of good debt. And now, how to navigate the budget and financial planning. I'm not a financial advisor, but I'm gonna give you, a couple things that I feel like you can do. So this is not financial advice. This is what I'm saying. Number one thing, like I go back to, is the discipline. How disciplined are you? Are you gonna be disciplined enough to budget and have some financial planning? Next, I say create great relationship with your finances. Understanding how money works. Those 3 things I believe is going to be the best way without getting too deep into it, because this is just surface level stuff. I want to get people in the mindset of understanding discipline is going to be number one, creating that great relationship with your finance, and understanding how money works. When you understand that money working for you is the best option, sky's the limit. Like now, but for people, if you like in debt and you want a fresh start with your credit report, what I'll say is educate yourself on consumer laws, get your credit cleaned up, and move with some urgency. Those are the three things I can promise you that will help you get faster. Like I said, I'm not a financial advisor, so please seek out one of them if you're looking for the answers. This is just some tips that I got. The airplane flying over because it knows I'm so fly. Ha 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 ha. How we doing in the chat though? Press a 1 if you're still with me. I see some ones in the chat. Let's get it. So let's dispel some of these credit myths, and then we're going to get y'all up out of here, man. So credit myths that have been put out there to the public, to the people, to the world, to everybody out there, that at least from what I've seen, not even to the world, only use credit for emergencies. Well, it depends. If it's personal, is it business? It depends. I still believe it's a myth. I believe if you truly understand credit and you know how to use it, you can use it whenever you need to use it. Credit card debt is bad. It depends. It takes 7 years for things to fall off your credit report. That depends as well. Are you going to do something about it? You can't get rich off credit. Credit is bad. That's a myth as well. Let's talk about the truth regarding credit though. I'll tell you, credit is one of the fastest ways to change your financial situation. You don't believe me? In 6 months, you can get $100,000 of available credit. In 6 months, if you're working and you're making $20,000 a year, can you ask your employer for $80,000? Absolutely not. Absolutely not. That's going to be some rare occasions, right? You can damn near be broke, and once you master the credit game, you'll never go broke again. This is the truth about credit. I'm telling you, your whole lineage can change off of credit. Your whole lineage. Once you learn this skill, you pass it down from generation to generation. You build your credit up to 750, 800. You got your nephews, your nieces, your daughter, your sons, your sisters, whoever, everybody on there, they absorbing that good credit. So now as they're fixing their credit, you like the guy that everybody goes to when they need, when they need that lifeline, boom. You could change your whole lineage. Everybody got good credit. Oh, you got 20,000, you got 20, you got 40, you got 60, you got 80, you got 20, you got a 10 ball, you got a 5 ball, you got here. All right, let's put down on this building. The family just put down on a building, generational wealth. And last but not least, credit is king. Yes, they say cash is king, but credit is king. Intro to financial literacy. I hope y'all enjoyed this. We're going to come back for a round 2, but I hope y'all enjoyed this. This was a wonderful sit down, wonderful little masterclass that I was able to get out. I'm glad y'all stood to the end, to the people who stood to the end. If you need any help regarding credit report, cleaning up your credit, I provide those services. All you got to do is drop a comment in the comment section, and we'll get back to you as far as a consultation, speaking of things of that nature. I definitely appreciate y'all. This is one for the books. Thank you.
Breadwinner, that's a dope facilitating from the Fed building. My kind of place with chips and later money ceremony. You stacking bread, I'm stacking cake.